We sincerely appreciate everyone attending today's third quarter financial results briefing for Robot Payment Corporation, fiscal year ending December 2025. I am Kikuchi, the IR manager, hosting today. Thank you. Today's speakers will be Kenya Kyoku, Representative Director, Executive Officer, CEO, Sota Kuno, Director, Executive Officer, and Takesato Fujita, Executive Officer, COO. We look forward to your support. We will now begin immediately with the opening address and presentation by Representative Director Kyoku.
Let us begin the financial results briefing for the third quarter of the fiscal year ending December 2025. Thank you. First is our corporate purpose statement. Next, the table of contents. We will give an explanation in this manner comprising a total of 26 characters. I will start by outlining the performance highlights. We have now finished the third quarter for the fiscal year ending December 2025. Third quarter revenue is up 18.6% year-over-year. Operating income saw a substantial rise of 58.4%. The second column from the left shows the cumulative results for the third quarter of 2025, which is our current performance. The right side shows the second quarter revised forecast, the full year earnings forecast, and the far right column shows the corresponding achievement rate. We are revising the full year forecast for fiscal year ending December 2025 upward. Based on recent trends, we are further revising upward the full year forecast disclosed on August 12th after the second quarter. The flow consists of 3 steps from the left. The leftmost column is the initial earnings forecast. The middle is the second quarter revision. Write up redo. Revenue is 3,235 million yen. Operating profit is 700 million yen. Revenue is up 17.1%, operating profit 45.9% year-over-year. Next, the dividend. For fiscal year 2025, the baseline was 20 yen per share based on the following policy. The dividend per share was initially set at 20 yen, as shown in the second column from the left of the 4 leftmost columns in the baseline figures. At the second quarter announcement, the third column from the left, we revised it to 22 yen on August 12th. And now for the third quarter, with increased profit, we revised the dividend upward to 24 yen. Below are the specifics of the dividend payout for the current period, including the dividend per share and the payout ratio. Finally, ARR has surpassed 3.3 billion yen. Average revenue per customer hit a new record, continuing sustained revenue growth.
That concludes my section. Next, I will present the company-wide results and the results broken down by business segment. First, company-wide results, the trend of quarterly sales starting from the third quarter of fiscal year ending December 2023. Dark pink recurring revenue drove continued sales growth quarter by quarter. Sales grew 16.8% year-over-year to 834 million yen. This is the trend of operating profit by quarter. We have also arranged these by quarter, starting from the third quarter of fiscal year ending December 2023. Operating profit increased significantly, up 47.1% year-over-year. This also sets a new all-time high for the period when considering the third quarter specifically. Next is the balance sheet. While there are no major changes, we announced a share buyback on February 13th this year. Consequently, shareholder equity slightly decreased compared to the end of the previous year in first quarter and second quarter. Our solid profit accumulation has increased shareholder equity in Q3, is larger compared to the end of the previous year. Thus, retained earnings have increased compared to the end of the period. This illustrates the characteristics of our balance sheet. This page explains the customer deposits. This is a redundant explanation, so I will keep it brief. The payment for our customers' sales is received by our company from banks or credit card companies, flows through us for a certain period, and then we remit the funds to the customers. Due to the lag between the deposit cycle and the withdrawal cycle, we fundamentally hold customer deposits, which results in a large pool of funds available for use, and then we distribute that money to the customers as part of our payment process in order to fulfill our financial obligations towards them. Consequently, on the asset side, cash is recognized, and on the liability side, customer deposits are recognized. This causes total assets to inflate beyond our actual fundamental balance sheet. If we exclude customer deposits, the balance sheet becomes compressed and compact, as shown on the right. Consequently, total assets increase by the amount of customer deposits. Thus, the apparent equity ratio, shown on the left, is 15.0%, but the adjusted equity ratio, calculated on a net basis after deducting customer deposits, is 63.4%. We believe this constitutes a very sound balance sheet. Next is segment results. First, subscription payments. Similar to the company-wide result, this shows the strong trend of sales for subscription payments by quarter. The payment processing volume has shown remarkable trends, and the average revenue per customer continues to rise, as mentioned in the previous section. This resulted in a 17% increase in revenue compared to the same period last year. These are the KPIs. As I mentioned earlier, the average revenue per customer, shown on the left, has slightly grown from the second quarter and continues to set new record highs. On the right, regarding the number of customers, this is also growing steadily. This is the trend for payment volume and transaction count. Payment processing volume continues its steady growth. The number of payment transactions, as we mentioned in the second quarter, the impact from the mandatory implementation of 3D Secure has stabilized. The number of transactions on a monthly basis has stopped declining, and we expect it to recover from the second quarter onwards. Next, I will explain the billing management service. This is the sales trend by quarter for billing management, like subscription payments. Similarly, the average revenue per customer continues to improve. Furthermore, customer acquisition is also growing smoothly, resulting in a 17% revenue increase. These are the KPI trends. Both the unit price and the number of accounts are growing smoothly. Next are the billed amounts and the number of invoices issued. Both continue to increase steadily compared to the same period last year.
Now I, Fujita, will report on the business highlights. Let's move on to the details. I will focus on the points that have changed compared to the second quarter. First is the professional services for subscription. We have newly incorporated enhanced communication tool integration. Simply put, this means integration with Line. We are strengthening this so that our customers can interact seamlessly with their end users via Line. Next is factoring, specifically for credit screening. We had previously mentioned various things we would be doing, and we have now started credit screening using Gemini. As a result, the credit screening time has been shortened, which in turn shortens the time it takes to contract and provide services to customers. Also, regarding new services, we are advancing 3 services this quarter: revenue-based financing, the Tokusoku service, and the overseas remittance product. They are getting closer to concrete implementation. I believe we are close to being able to make a new announcement to everyone soon. Therefore, please bear with us a little longer. Now I will move on to explaining the topics for the third quarter. The first is the shareholder benefit program for our 25th anniversary. It's not we start, we will do it. Since it is our 25th anniversary, it is a commemorative benefit. While details are available in the release, the intent is to reward shareholders while maintaining good operations. And this commemorative benefit program serves as a thank you to the shareholders who have supported us for 25 years. Next, we will strengthen research on AI utilization. This is not in the same vein as the AI we launched previously, but we are promoting AI utilization internally from the outset. Within that framework, we have established an AI research team within the Corporate Strategy Office to reduce internal workload and promote AI utilization in our products. We will proceed with AI use for workload reduction and products. Next is something a bit different, which falls under executive administration. We had received feedback from employees who wanted to buy shares while the stock price was low. So this is positioned as one grade above the employee stock ownership plan, but the employee stock ownership plan alone could not meet the demand from employees who wanted to buy more shares. Therefore, we created a loan system to make it easier for employees to purchase shares. Some employees are already using the system to purchase shares, and we believe this will allow us to further strive for corporate value improvement with the entire company united. Because of things like this, the management ratio of the employee stock ownership plan is also gradually increasing. We will continue to be committed to increase the stock value with the clear objective of enhancing corporate value across the entire company. Next is the billed amount issued through billing management robo surpassing 3 trillion yen. You might think it's just the amount on an invoice, so who cares? But the amount on the billing management logo invoice corresponds to the potential upside for outsourced management robo. Therefore, if this number is large, there is a possibility that the outsourced volume may increase in the future. So, we track this as a KPI. This figure has surpassed 3 trillion yen. Next is the number of account count. It was 996 as of the end of September, but in October we surpassed 1,000 active accounts. In terms of shipments, it's much higher, but active means after cancellations, the net current number of accounts, or rather the number of paying accounts, surpassed 1,000. This represents a milestone, so we have issued a release. We will continue to strive to further increase this account number. That is all from me.
Next, I will discuss expenses. We are showing the trend by quarter for advertising expenses, salaries and allowances, and development expenses, which constitute the main expenses. In line with the medium-term management policy announced in 2023, which we will continue to uphold, we are continuing to implement efficient expense increases. On the left is advertising expenses, an increase at the same level as the most recent fiscal period continued in the third quarter as well. We will continue to implement marketing measures that emphasize cost effectiveness. Now, regarding salaries and allowances, this has increased slightly compared to the last quarter, but it remains within the range of the stable growth trend. In line with the increase in the number of customers, as shown on the next page, we continue to strengthen our existing customers' success. This includes providing thorough support to existing customers and offering additional options, which contributes to an increase in unit price or a lower churn rate. On the far right, we have development costs. This continues to be stable. We are pushing forward with internalizing production, continuing to utilize AI and other technologies to enhance the efficiency of our development framework. We will continue to focus on productivity-driven development and quality improvement. Regarding the trend in our workforce numbers, we saw a slight rise since the second quarter. As previously stated, we have recently reinforced our staffing in the customer success and support domains. Also, this is a recurring request, but please register for our email newsletter and our official Line account. Today, in this format, we are holding the financial results presentation. We will be providing information such as the financial results briefing materials, guidance on the earnings package, or guidance on performance revisions via Line in a timely manner to everyone. Therefore, we would be grateful if you could also register for our official Line account.
Thank you. Finally, the representative Kyoku will offer some closing remarks.
Thank you for today. Recently, Kuno and I traveled to Singapore, and we met with institutional investors overseas. We visited institutional investors abroad. Although I cannot speak English, Kuno is fluent, so he handled the in-depth communication in English. We communicated deeply. We want to continue engaging with overseas institutional investors. Also, on December 11th, we are hosting a fan meeting where we will invite investors to participate. It will mainly be a talk session with famous individual investors. Additionally, while dining together at the tables, investors can discuss deep business matters with executives. We will be taking direct questions in that format, resulting in a program full of content. We hope you can attend. We will steadily execute what we decided in long-term management strategy from next year. Therefore, we ask that you continue to monitor our progress and offer your continued support in the years ahead. Thank you for your continued support. Thank you for today.
With this, we will conclude the earnings presentation for Robot Payment Corporation. We sincerely appreciate your attendance today. Thank you very much for your participation.